Good morning and thanks so much for tuning in. You're watching Trade Talk on BT Prime. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Lots of news to talk about this morning, and in fact, we've got an action-packed show. We've got an analyst that will come in just a bit to talk about the news item from last evening, and that had to do with a lot of changes on the GST side.
Absolutely. And clearly, the markets have been taking cues. There is profit booking at higher levels, Alex. And from there on, where we are going to head from here on is going to be interesting because clearly Nifty has been exhibiting strength, whereas the weakness is coming in from Bank Nifty as well.
Yes.
If there is further weakness that continues in terms of Bank Nifty, that's going to be a spoiler for the overall markets. Now, clearly, the positive global cues as well as Reliance Industries.
Yeah.
These two are the key ones to watch out for, right?
We were talking about it this morning, right? So the Nifty 50 trading in a very narrow range. If you think about it, 400 to 500 has been that range, very short range. But Reliance Industries is exhibiting quite a lot of strength. In just this week, it's gained about 5% and lending quite a bit of support. But you were pointing out profit booking and primarily in the financial names, the Nifty Bank exhibiting weakness in trade yesterday and also on Monday.
Absolutely. And just to make a point in terms of Reliance Industries as well, in fact, there has just been a Morgan Stanley note which has come in and they are overweight on the counter and they have a target price of 3,210. So that's a substantial upside coming in there and it's mainly gaining attention on the back of the financial unit listing as well as the retail buyback plan. So these two are the major triggers that are working in favor of Reliance Industries as well. But taking it from Bank Nifty as well. Now, third consecutive session of decline is what we've seen in terms of Bank Nifty. Auto index yesterday in the last hour of trade actually hit an all-time high. So there is strength coming in terms of the auto pack as well. And you have the technology space that will continue to remain in focus on the back of the earnings from TCS, HCL Tech. Both of these will be reporting earnings today. And you have a Wipro that will be in focus as well on the back of the deal win. So we will get you more details on that. But on the technical side, 19,400 to 19,500 is the range, over the last 6 trading sessions. There is strength, however, coming in at lower levels. So if you see the resistance area, 19,525 to 19,550 is the kind of zone where we are seeing, Nifty face resistance. Below 19,171 is the bearish sentiment. And it's absolutely going to be crucial for markets to actually maintain the support level of 19,400. On the options front as well, Nifty has supported 19,400, whereas resistance at 19,500. Talking about Bank Nifty, 44,500 to 44,200 is the key support level that we have been tracking. And on the upside, a 45,300 to a 45,500 is where we could see good amount of resistance coming in there. We've seen the highest put OI at 19,400, whereas the highest call OI at 19,500. And the PCR has now increased to 1.07, but that's a comfortable level to be with. So overall, Alex, if you go to see, there is underlying strength even at lower levels, markets are finding some strength that's coming in. But if Bank Nifty plays a spoil sport, that's something we need to wait and watch. But moving from there on, interesting data that's coming in from the mutual fund industry as well for the month of June, which is indicating where the action is in terms of, the DIIs.
Individual stocks.
What have you picked up?
So of course, the headline, and we're talking about individual stocks here, but I do want to also point out that if you looked at the latest AMFI data, it pointed out to quite a lot of inflows into actively managed small cap funds. And we'll be talking about that later this evening on the mutual fund show as well. Over 5,000 crore rupees on a net basis coming in to small cap funds. But to what Hiral was just pointing out, individual names, and you see quite a lot of action in the HDFC twins. According to an MK report, you have inflows to the tune of 5,240 odd crore into HDFC. Coal India also seeing an inflow of about 1,500 crore rupees. HUL is the other one that sees about 800 crores of inflows. On the other hand, you have HDFC Bank that saw outflows of about 4,260 crore rupees. Axis Bank and HAL as well seeing outflows. But Hiral, to the point of the HDFC twins, over the past couple of months, you see quite a lot of action from the mutual fund industry and otherwise as well, as that arbitrage between the two has narrowed as we move to the record date, which is tomorrow.
Absolutely. And if you see, as you mentioned as well, it's interesting to see how HDFC has seen an inflow and bank has seen an outflow. So that's clearly telling you the arbitrage what the mutual funds have done. But, as we're talking about HDFC as well, Alex, it is going to be farewell with regards to HDFC today, right?
Today is the last day that you can trade HDFC, and all settlement takes place, of course, tomorrow, T+1. Let's take you through some of the details. We've told you about this in the intervening time between the time of the announcement of the merger as well as the record date, which is, by the way, tomorrow. And there is going to be a change post today. Today is, as I mentioned, the last day that HDFC trades. And therefore, there are several index changes that you need to know about. Of course, on the Nifty 50, we've spoken about this as well. LTIMindtree is going to be replacing HDFC on the Nifty 50. On the Nifty 100, JSPL comes in. You have LIC Housing Finance that comes in the Nifty Financial Services. And then a number of other changes also on the NSE indices. You have the likes of Poonawalla FinCorp that is also going to be replacing the counter on the Nifty Financial Services. On the Nifty Housing, you have Phoenix Mills that comes in and a few other changes as well. On the Sensex, you have JSW Steel that comes in place of HDFC. On the BSE 500, JBM Auto will come in and Zomato will come in on the BSE 100. A few other smaller changes as well with regard to the index participation there. On the F&O side, and this is important to bear in mind, contracts will be settled today in the market segment, and the pay-in and payout of the final mark-to-market settlement happens tomorrow. That is T+1. So we are bidding adieu to HDFC in trade today, Hiral.
Absolutely. And it's going to be interesting to see how the stock moves in today's session. But moving on, as you mentioned about GST as well, few changes. This was the 50th meeting. Janani is going to join us as well, Alex, to tell us more in terms of, what actually gets expensive, what gets cheap. And, there is probably a game over for one of the segments as well.
The big headline, of course, from yesterday's session, or rather from yesterday evening, is the outcome of that GST Council meeting. The gaming industry was seeking clarity, and the clarity that they've gotten perhaps not a tune that they'll be very, very happy with. But Janani joining in. Janani, what can you tell us about the latest developments and the implications of that?
Good morning, Alex and Hiral. As you said, the 50th GST Council meeting was certainly a memorable one. But first, with the good news, food and beverages served at cinema halls, when bought with a ticket, is now actually cheaper. It used to be served at 18% GST in line with restaurant services. Now, if it is bought along with the ticket, then we can look at a 5% GST. Also, medicines for cancer treatment, medicines for rare diseases, and foods for special purpose medicines. Now, these have gotten a tax exemption, which means no more 12% IGST. Even private satellite launching services have gotten a fillip, so there's going to be a tax exemption for them too. And on a few minor items, Fitment Committee recommendations on Zari threads, unfried snack pellets, LD slag, soluble fish paste, all of this down to 5% from previous 18 or 12% rates. But moving on to the industries that were not so happy, 28% on online gaming, casinos, and horse racing dominated headlines, and has also been the first one which has seen quick industry reaction. This is a 28% flat, which is uniform on all three sporting events and on full face value. So if we look at it in casinos, it will be on the total value of chips purchased. On online gaming, it will be the full value of bets. In horse racing, again, full value of bets placed with the bookmaker. Also important is the fact that there has been a clarity on the cess applicability for multi-utility vehicles. Previously, it was just SUVs. Now, all utility vehicles, if they have three conditions, that is, they have an engine capacity of 1,500 cc, if they pass a ground clearance of 170 millimeters, and if they are in length of 4 meters or above, then they will have a 22% cess applicability, and this is over and above the 28% GST that they're already paying. So this is the sum of it all. These are the winners and the losers from the 50th Council meeting. Back to you.
Thank you, Janani, for getting us all the details. So interesting times. Let's see how PVR reacts in trade on the positive end. But the online gaming industry, that's going to be the key highlight of the day today. And clearly, to discuss more in terms of how will it impact a stall like Nazara, joining us on the show is Jinesh Joshi from Prabhudas Liladhar Janesh, good morning and welcome to the show.
Good morning.
Janesh, with the 28% GST that does come in, how are you seeing it impact Nazara? Because I was just doing a little number crunching, around 1,091 odd crores was their FY23 revenue, out of which 37% comes from gaming, whereas 49% does come in from esports. Now, World Cricket Championship, as well as if you talk about the classic rummy, which they used to call it skill-based, these two are the major gaming segments which have good exposure in terms of India.
Correct. So if you look at this development, definitely it is a big negative for the online gaming industry, given the fact that now entire 28% tax will be levied on the full bet value. But if I were to talk specifically about Nazara, their real money gaming business in FY23 contributed roughly 5% to the top line. So I think the impact on Nazara per se is not that huge, given a lower contribution from the real money gaming business. But definitely this kind of puts a roadblock on their future M&A strategy, given the fact that they were planning to acquire some companies on the RNG side. So we will have to adopt a wait and watch approach on that front.
So in conversations that we've had, Janesh, with Nazara as well, they've said that they were going a little slow on that real money gaming segment, seeking clarity. But then does this affect future business prospects? Because this is a very fast growing segment, and therefore will you have to adjust your expectations on earnings going forward?
See, as I mentioned, the business was only 5% to their top line, and it was not contributing much. Very recently, they have announced a fundraise of 750 crores. In fact, their subsidiary Nordwin, which is into esports, have also raised about 200 crores very recently. They have roughly 600 crores of cash on the balance sheet. So it's a cash-rich company looking for a further fundraise. And given the fact that it has a very diverse portfolio into various other gaming segments, like, say, for example, esports or gamified early learning, or for that matter freemium or edtech, so there are multiple levers and segments where they can potentially deploy the capital. So net I would say definitely a big negative, because a 28% tax can virtually kill the industry. But as far as Nazara is concerned, given the exposure is lower, I do not see much impact in the near term.
Right. Thank you, Janesh, for speaking to us and getting us that, details in terms of what could happen with Nazara. A 5.2% is the kind of exposure that the management has also indicated. But moving on, another stock is a Delta Corp that could see an impact as well. Now, what they have said is they in fact acquired actually Adda52.com, which was India's leading poker site. And this was done back then in September 2016, Alex. Now, clearly, even they have indicated that online gaming is at a nascent stage. And ICRA report estimates the online gaming industry at around $200 million in India. If you see in terms of FY23, almost 1,067 odd crores for Delta Corp is the kind of revenue that they get. And around 191 odd crores came in from the online skill gaming ops. So how much of it will be impacted is something we need to wait and watch and see. But 191 crores is what they have garnered in FY23 from the online skill gaming operations.
And most important to point out that this is a very, very fast growing segment of the overall market. And particularly during the pandemic is when we saw a big boom. This kind of comes as a negative for growth from this point on. We'll have to see what reaction comes in on those two counters. Perhaps Delta might see more of an impact than Nazara Tech. As we've pointed out, the impact for Nazara is limited. But let's turn to perhaps what's going to be the headline later this evening post-market, and that's going to be the results for the IT companies, the IT majors. HCL Tech as well as TCS going to be reporting their numbers today, and Wipro tomorrow. Tushar is joining in to tell you what you need to pay attention to. Tushar, morning.
Morning, Alex.
What are the headlines for you?
So today, TCS, the biggest IT company in India, will report the results, as well as the third largest, which is HCL Tech. What we're getting, the feelers, what we are getting right now is TCS and HCL will have muted or flat revenue growth to 1% revenue growth sequentially in this particular quarter. Now, remember, this is actually the seasonally the most strong quarter for the IT pack. A few things, as far as TCS is concerned, a few things that we need to watch out is first is deal making. Discretionary spending has completely dried up. There are some large deals coming from Europe that has kept TCS buoyant in Q1. while there is a Trans-America deal that was scrapped in the US, there was a STEM deal and a Marks and Spencer's deal that was added to that were added to TCS's client list. So which effectively means that the deal pipeline is there, but there's still delays in terms of how the deals convert into revenue. And second thing to watch out for is the margin play. Profitability is likely to take a hit this quarter because of the wage hikes that happen during this time of the year, around May, March, April, when appraisals happen. There's muted hiring as well. There's no clear picture from TCS how much they've hired. Maybe we can get a clearer picture when TCS speaks to us this evening. Segment focus. TCS has an outsized presence in BFSI. That's about 38% of the total revenue. Regional banks in the US, though they have recorded record profits in the first quarter, that is April-June quarter, they are still not spending on IT. What is the key non-triple for them? In focus is the new CEO, Krithi Krithivasan's outlook for the entire year. Remember, JP Morgan has already said that the entire year could be a washout. So we want to know what Krithi Krithivasan thinks on that respect. Coming to HCL Tech, again, revenue is flat. What we need to watch out for HCL, we need to watch out how the deal making is going to fare because of the seasonal dip in the products and platforms business. Again, their margins are also underplayed due to muted revenue growth as well as annual productivity commitments that they have for this quarter. Most importantly is the guidance. HCL Tech is one of the two large IT companies that give a guidance annually or in a quarterly basis. We are looking at whether they'll revise it lower for H1 or for the full year. Key non-triple again, HCL has delivered extraordinary TCV, total contract value, over the last few quarters. Will it continue this quarter? That's what we are looking at. Alex.
Right.
Absolutely.
Thanks for getting us the details in terms of both these counters. Anand Rathi also will be reporting numbers today, but staying with the IT space, Wipro is in focus as well because we've been talking about the deal wins. What's in store for a Wipro, Tushar?
So Wipro, just a day before its results, which is quite unlikely what they have done because they're generally in a silent period. They don't announce such investments just before the results, right? So what they have announced right now, about 15 minutes ago, that they have launched something called the Wipro AI 360. What this is the Wipro is investing $1 billion over the next 3 years to integrate AI to all its platforms, whatever they do. They're also going to train all its employees on AI. That's 250,000 people on AI. So this is a big move right before the results. While we await what happened in Q1, what the numbers that come in, this should actually be some fillip to the stock that is for today.
Yeah, interesting that you point that out. Thank you so much, Tushar, for joining in and for giving us that perspective. Talking about the IT stocks, you've seen them under pressure so far this week. TCS, Wipro and HCL Tech losing ground at the start of the week. Yesterday, there were not too many moves, but then perhaps we'll have to see today with that pop that or you might see a pop rather in the Wipro stock on the back of that latest announcement. Rishi is joining in now to talk about the space on iron pellets, because there are reports coming in, Rishi, that talk about the possible bottoming out of prices of iron pellets. Who are the beneficiaries and why are these analysts saying that iron pellet prices could be bottoming out?
So, as you said, iron pellets are expected to bottom out, and that's what analysts are also saying. But that is what the data is saying as well. So, international pellet prices are about 26% lower than the 5-year average of about $164 per ton. Now, the ferrous prices are expected to improve as China is also expected to give a stimulus to its struggling real estate sector, which so China accounts for a majority of the steel consumption. So if a stimulus comes in China, it will eventually improve demand for ferrous metals as well as pellets as well. Now, secondly, the dollar is expected to remain weaker in the medium term. Now, this is because inflation has started cooling down in America, which would mean that the Fed is approaching towards the fag end of its rate hike cycle. So as the rate hikes also cool off, the metal prices as such for holders of other currency, it would become cheaper, which would increase demand for metals and eventually improve prices as well. Now, this expectation of bottoming out of metal prices would benefit pellet companies like Shyam Metallics and Godavari Power and Ispat, which have a higher share of the volumes in pellets. So Shyam Metallics has about 36%, while Godavari Power has about 85% of its volume in pellets. Now, this higher volume share, which would also imply that eventually the realizations would improve as pellet prices bottom out and maybe even rise in the medium term. And their valuations, if you also look at the valuations, they're over the past five years, they're moved along with the pellet prices. So they have been moderately to highly correlated with the pellet prices, which would mean that provided that China gives the stimulus and also the dollar remains weaker, the valuations of these two companies are expected to improve and their performance may also improve in the medium
And that's
term.
going to be an interesting one because over the last couple of weeks as well, you are seeing some bit of action in terms of Godavari as well as Sham Metallics as well. So probably, as Rishi has been mentioning, you could see some potential upside that could be coming in, not only from a stock price performance perspective, but from a valuation perspective as well. Thank you,
This
Rishi.
could play out, we were talking about this, Rishi, could play out over the next 6 to 12 months, right?
Absolutely. Yeah.
So that's going to be an interesting move. Thank you, Rishi, for getting us the details. But staying with, moving from the metal pack, another stock that is in focus is Coal India. In terms of Coal India as well, one of their subsidiaries is looking to develop a 600 megawatt solar power project. Himansh is joining us to get us more. Himansh, solar power, what is the goal that Coal India has? If you could help us understand more details.
Right. So a great initiative by Coal India's Chhattisgarh-based subsidiary unit, Southeastern Coalfields, which has lined up an investment of about 121 odd million US dollars, or roughly over 1,000 crores over the coming years, to develop rooftop and ground-mounted capacity totaling up to around 600 megawatts in the coming years. Some of these projects will be implemented on a build, own, operate model. And this strategy comes in line with the country's larger goal of Panchamrit as outlined by the Prime Minister, where we target a net zero carbon emissions by 2070. And coming in line with this is Coal India, which has set itself a target of 3,000 megawatt capacity by 2026. Looking at Southeastern Coalfields project pipeline, we see that 180 megawatts worth of projects are already in various phases of development, and they are based across in Chhattisgarh, Madhya Pradesh itself. The company also recently commissioned a project in Johila region and talking about the two largest solar projects, which are 40 megawatts each. Both of them are based in Chhattisgarh, Surajpur district, and they're expected to be all set by the end of this fiscal. As of last fiscal, Southeastern Coalfields contributed to roughly 1/4 of Coal India's total coal production. And this push towards green energy not only reduces the company's overall carbon footprint, but it's also a great step for the firm to balance its power needs with its coal mining and allied activities.
Thanks so much for that update, Himansh. And interesting that quite a few of these traditional energy players are now moving towards either renewable side or the value chain. IOC not too long back announcing battery swapping as an initiative. So you might see more announcements along those lines in the coming weeks and months. But Saloni is joining in now to tell you about a few more stocks that you would need to pay attention to on account of being in the news. Saloni, going to you first. What are you picking up?
So first, Lupin received an establishment inspection report from the US FDA for the company's Pithampur Unit 2 facility that manufactures solids, oral solids, and ophthalmic dosage forms yesterday. So this establishment inspection report was issued post the last inspection of the facility that was conducted earlier in the year from March 21st to March 29th. So the US FDA also issued 10 observations for the Pithampur facility earlier in the year. Then we have Shree Cement, which clarified on news claiming that the government issued inspection order against the company in an exchange filing yesterday. The company said that it had not received any such notice or inspection order so far. Also, after the income tax department raided 5 Shree Cement locations, and the news regarding the company allegedly evading rupees 23,000 crores in taxes came out, the stock dropped over 10% and the share price was as low as rupees 22,605 on June 26. The shares gradually did gain after that, and as of yesterday's closing, the share price stands at rupees 23,955.35. Also, according to Bloomberg data, out of the 44 analysts that are tracking the company, 10 recommend a buy, 18 are maintaining a hold, and 16 are suggesting a sell on the stock. And the average 12-month consensus price target implies an upside of 1.1%. Moving on to Bhansali Engineering Polymers. So the board of the company approved allotment of 8.29 crore equity shares as fully paid up bonus equity shares in the ratio 1:2 to the shareholders. Coming to Mahindra and Mahindra, so according to the company's report for the month of June, the company's production across all categories stood at 64,000 odd units. As compared to the company's production in June of last year, the production this year was up 19.1%.
Thanks, Aloni, for getting us these stocks that we should be watching out for. But there is an additional list as well, for which Varsha is standing by patiently to give us the names that she's tracking today. Good morning, Varsha.
Good morning. Yeah, I've got 4 stocks with me. So the first one is Spectrum Electrical Industries Limited. Now, this company has started manufacturing of EV chargers in order to meet market demands and to enhance their business growth. The next we have is NTPC. Now, UP approved 2 Obra D thermal power projects of 800 megawatt each. Now, the projects will be executed by the government with 50-50 partnership with NTPC. The next company that we have is Tattva Chintan Pharma Chem. Now, this company has agreed to raise more capital, not exceeding rupees 200 crores, by issuing equity shares or equity-linked instruments through public or private offering or QIP or any mix. Now, the company's weak operating metrics has become a bottleneck of its growth path, and the company recorded a sharp margin correction in Q4 of FY23. Now, the management has elaborated different kind of products, but the problem here is a large part of those new products will require at least 12 to 15 months to scale up commercially. The next company that we have is Happiest Mind Technologies. Now, the company fixed 972 as floor price for the issue under QIP. The company had in October 2022 planned to raise 1400 crore through various means. Now, the company has given FY24 guidance of 25%. You need to look that in FY23, the company missed its guidance due to the budget being pushed in January. Now, as you know, the result season is on for IT from today. So let's see how this grows well for Happiest Minds.
All right. That's thank you so much, Varsha, for joining in and for giving us that additional information. Quite a few stocks already that we've covered in trade today, but moving away from stock-specific action and telling you about an initiative by the Reserve Bank of India, the central bank digital currency. There's an update that Jasprit is picking up about the usage of that currency so far. Jasprit, morning. What are you picking up?
Hey, so there was an event yesterday that was organized, and the RBI Deputy Governor was speaking at the event. All banks were there as well, and they shared that the CBDC so far, since being piloted in December 2022, has managed to garner about 1.3 million users as of June, and there's about 300,000 merchants, or 3 lakh merchants on the CBDC as well, that are now interacting with it and using it. So it's an interesting update, given that the pilot has been ongoing for 6 months. There's been limited traction if you think about the scale of payments in India, but it's certainly a new sort of payments device that is coming up on the scene. It'll be interesting to see how it plays out in the overall payments ecosystem as well, with given how popular UPI already is and what it takes for customers to get really accustomed to the new sort of digital rupee, as we're calling it.
Absolutely.
Thanks.
All right. Thanks so much for that, Jasprit. We've got action on the primary markets also to talk about, Hiral. Quite a lot of action in the recent past in the primary markets, but Utkarsh Small Finance Bank is the company that we're focusing on. Sajid is joining in to tell you more about that. That issue opens today, Sajid.
That's
morning.
right. Morning, Alex. The issue opens today is 23 to 25 rupees per share. It's a small issue. 500 crores is in terms of primary offering coming from the bank. The total size of the bank at the upper end of the price band would be somewhere around 2,700 odd crore rupees. But what is important is that the growth rates are very aggressive for this bank for the last 2 years. It has an NI of nearly 1,500 odd crores, 1,530 crores, and a net profit of 400 odd crores. But it is still smaller compared to the other small finance banks that we have, especially with respect to EU Small Finance Bank, Equitas, and Ujjivan. So it's smaller than that, slightly bigger than Suryoday. But from a point of view of exposure, it is mainly in UP and Bihar, where it gets 53% of its book from, and that's also a risk in terms of in a slowdown or any natural calamity that's going to impact its performance going forward. So that's something to watch out for. We already had the anchor book opening yesterday, and it got some 230 odd crores from at the upper end of the price band. So pretty mucky names backing the small finance bank, especially with respect to Shriram Life of ICICI Pru, Bharti AXA, SIDBI. You have the British International, which is the old CDC, which is backing it, and RBL Bank also has a stake in it.
I mean, that's an interesting fact to understand, right? A lot of other banks were backing this small finance bank as well. So how the entire subscription pans out is going to be interesting to
It
watch
is
out
important because it's geographically located in the northern India. So to get penetration in terms of insurance or other products, you're seeing a lot of insurance companies having a stake in this bank because they will be able to push the products to the banker channel.
Right, and I think the expansion strategy from here on is going to be absolutely crucial. Thank you, Sajid, for getting us the details. So I think lots that we're covering, Alex, in today's session, from the primary markets to the secondary markets. Earnings season is kickstarting today as well. So an interesting day of trade is what is in store for all of us. We're just a couple of minutes away from markets open. Please stay tuned to BQ Prime for lots more action on the other side. That's a wrap from Alex and myself.
How do you make the most of the India opportunity as an investor? For that answer, all roads lead to BKC in Mumbai on the 13th of July. 3 big money managers describe the size of this opportunity. 2 of the largest mutual fund CIOs then tell you about the mega trends that they're investing in. Will the current capex cycle be similar to the one between 2003 and 2008? We get that answer from Sanjeev Sharma of ABB in a conversation with veteran investor Madhusudan Kela. And then we round it off with 2 of the most prominent investing names talking about how to make the large bets and make it really big. All of this and more at the Trident Hotel in BKC on the 13th of July. Catch the action live on BQ Prime.